Hello everyone, I am Pratap here. We are at lesson 6.2 examples video. It is related to finding zone strength and base candle count in demand and supply zones. Even before that, please note this lesson is having dependency on the earlier lessons. In case if this is your first visit, please understand we are providing complete free training on supply demand zone price action. All the training lessons you can access at our NeoStock YouTube channel. To access all the earlier lessons, you just click on the tab Playlist. Here you can find two important playlists. One is Supply Demand Zone Price Action course, and the new playlist is Examples related to Supply Demand Zone Price Action course. So each lesson, starting from lesson 1.1, examples videos are available in this examples playlist. First, you need to complete the training lesson and then you should complete the example lesson. After that, you should go to the next training lesson and then you should go to the next examples lesson. To access all the training lessons, you click on the View Full Playlist. I am clicking on View Full Playlist. Now we are into Supply Demand Zone Price Action course. So far here we have until lesson 30. You just scroll down to the bottom of the page. Here starting from lesson 1.1, all the training lessons are placed in an order. So currently we are discussing the examples video related to lesson 6.2, that is about zone strength and base candle count. First you complete this training lesson and then you get into examples video. So this is lesson 6.2 examples video. So before we get into the examples, let me quickly summarize what you already learned in lesson 6.2. So you learned a zone's leg out with gap is having excellent strength and it is a tradable zone. Then you learned a zone's leg out with high explosive leg out candle is having again excellent strength and such kind of zone is a tradable zone. Next point you learned, a zone's leg out with follow through candle is also having excellent strength and it is a tradable zone. And then you learned a zone's leg out without follow through candle is having a good strength. Earlier excellent strength, now good strength. And also they are also tradable zones. And regarding the strength, the most important point, a zone's leg out strength with sluggish is having a weak strength. And it is not a tradable zone because many times these zones will be violated. And your stop loss will hit. That way you get some losses. That's why we need to avoid such kind of zones. Sometimes they work, but many cases they may fail. This is regarding the zone strength. Last 3 points are about base candle count. A zone having a base candle count between 1 and 3 candles, 1 base candle or 2 base candles or maybe 3 base candles, up to 3 base candles, minimum 1 or maximum 3. Such kind of zones having these between 1 and 3 base candles is called as excellent zone and it is a tradable zone. And next point, a zone having base candle count between 4 candles and 6 candles. Total candles in a base could be between 4 and 6 are called as good zones. Maybe they are not excellent, but they are good zones. That's why they are also tradable zones. And the last point, important point you learned, a zone having base candle count more than 6 candles is called as a weak zone. Such kind of zones will be violated easily and your stop loss will hit. And that's why those zones are called as not a tradable zone. So this is the summary of what you learned in lesson 6. Now let us look into the examples related to these zone strength and base candles, and let us see how such kind of zones are working, how well they are working. Is every zone is working, or sometimes some zones are getting violated? That is also we should understand. So now I am getting into the examples. First, I have taken Bitcoin. Look into the Bitcoin. Already we have discussed in the previous videos this particular zone, but not related to strength and base candle count, but some other examples related to the previous chapters. See, here you have a drop candle. You have 1, 2, 3, 4 base candles. A zone is having between 1 and 3 base candles is called excellent zone, tradable zone, and between 4 and 6 are also called as good zones. They are also tradable zones. So it's a good zone, no doubt. But another side, see, we have a leg out. After that, you have a follow through candle, a rally candle, and next candle is also rally candle. Such kind of mechanism is called follow through candles. And such kind of zone is having a strength, excellent strength. A zone having follow through leg out candle. This is a leg out, a follow through candle. It is also a rally candle. Leg out is always a rally candle. Follow through candle is also a rally candle. Such kind of zones are called as zone having excellent strength. So let us draw the demand zone here. Okay, in drop base rally, the lowest wick of leg in, base and leg out. So which one, base, leg out or leg in? Which one is having lowest? Leg in is having lowest. That's why I am drawing the zone until low of the leg in. And then you have 4 base candles, and then you have a rally candle, and then you have follow through candle. Such kind of zones are called excellent zones. Base candle is good. Follow through candle, excellent. Many times such kind of zones might be giving you good trade opportunities. See here, this zone gave you a trade opportunity here. Even if you take type 2 proximal entry, still you got the trade in this candle. After that, prices went more deep near to the stop loss value, but they did not hit stop loss. After that, then prices are started moving up. Imagine how much profit you would have got from Bitcoin. Until here, you would have got a very good profit. What is the reason? Because this zone is having a follow through candle, and also the base candle count is less than 6. Because more than 6, if a zone is having base candles, that is called as a weak zone. You can't trade. But this is a good zone. Between 4 and 6 is a good zone. See how well Bitcoin would have given you good profit based on zone strength and base candle count. But are they good enough to plan the trades? No, not really. Because you need to observe some more points that you are going to learn in the upcoming lessons. But minimum criteria, they itself are indicating the zones could be good zones. With some basic criteria, you are in a position to take a decision. Of course, always we have to take best decisions. But basic level itself is giving you good results. Okay. Next, let us look into gold. Look into this gold chart. You have a drop candle. You have a base candle. You have a rally candle. What is the next candle? Is it a rally candle? No. It is a base candle. Moved the prices. That means this is a leg out without follow through candle. See, leg out without a zones, leg out without follow through candle. This is the one. A zones leg out without follow through candle is considered as a good zone. The zone is having good strength. Okay. A zone's leg out without follow through candle is having good strength and it is a tradable zone. Because it is a tradable zone based on this, what about base candles? You have only one base candle. What is that? A zone having a base candle count between one candle and three candles is the excellent zone and it is a tradable zone. That means base candle count is excellent. And the zone strength is good. So it's a good combination, right? Now you draw a demand zone here. See, price has reached. This is only a type 1 proximal entry. If you would have drawn type 2 for risk management, you would have missed this great trade. But those who took wick to wick trade, that is a type 1 proximal entry. Type 1 proximal is wick to wick, higher wick to lower wick. You draw the zone. Type 2 proximal, higher body to lower wick. Type 3 proximal, lower body to lower wick. This is type 3. This is type 2. And this is a type 1 entry. Type 1, anybody planned type 1 entry, they would have got an excellent profit in the gold. See, after that, how prices were started moving up. They just flying, still. The reason is this zone is having excellent base candle count, and second, this zone is having good strength. Without follow through candle is a tradable zone. That's why you can plan a trade and then nicely prices moved up. Okay, next let us look into another example, silver. Let's go to 3rd July 24. July 3rd. Okay, see here. You have a rally candle, you have a base candle, you have a rally candle. Let me draw a zone here. What is the zone distal line? The distal line is lowest of either base candle, excuse me, lowest of either base candle or leg out candle in rally base rally. You won't consider leg in rally base rally. You consider only in the drop candle as a leg-in, then you consider even leg-in. But this is a rally-based rally continuation pattern. Definitely you cannot consider leg-in for the lowest value, but you can consider base candle, you can consider leg-out candle. Now you tell me, base candle is having the low value or leg-out is having the low value? Definitely leg-out is having the low value. So that's why I am drawing the zone until low of the leg out. So this is our demand zone. Okay, you have a rally base rally. So what is the strength of this zone? Base candle count is excellent. Because base candle is having only one base candle, it is excellent, tradable zone. But what about strength? Is it having a follow through candle? No. Is it having a leg out without a follow through candle, maybe a base candle? Is it having? No. What it is having? A sluggish candles. What is sluggish? Prices are moving within this. They are not going away from the leg out. They are within the leg out. Prices are struggling. See, this candle within the leg out, this candle within the leg out, this candle within the leg out. According to the technical analysis concept, these kind of candles are called inside bars. So within this candle, all are inside this candle. If you draw high of this candle, low of this candle, inside the candle, all these candles are placed. The old technical analysis, olden days, especially when I learned technical analysis concepts somewhere in the year 2002 or 2003, at the time I learned this concept, inside bar. or inside the candles. So mostly you will be having within this leg out candle, prices will be moving for a couple of days or 3 days, then such kind of, or maybe more days, then such kind of candles or such kind of mechanism is called sluggish mechanism. So that's why this is having a leg out with sluggish. Such kind of zones are called weak zones. Such kind of zones can't be traded because they will be violated easily. See here, in this candle, completely this zone is gone. Even in this candle, prices came below the zone, completely came and closed below the zone, and then market started moving down. Sluggish. What is the reason for this sluggish? I didn't explain this point in the, I don't know, I didn't remember. Maybe I thought I didn't explain this point. See, there could be several reasons for the sluggish. The most important, one of the important reasons could be, there could be an immediate supply zone might be there. That is not letting the prices going up. That means supply is very strong. See here. Is there any supply zone? Yes, here you have a rally, 2 base candles, drop candle, follow through candle. See, the supply is very strong. This is not letting the prices go down. Go up. See, prices, the supply is pushing the prices, not letting the prices go up. That's why we are seeing sluggish nature in this area. Because supply is much stronger than this demand. It completely consumed all the demand and no more institutional order flows. When there are no more institutional, see how easily prices came down. With another supply, institutions again pushed the market down here. See what kind of price action took place. What kind of price action took place here? So you will be seeing such kind of reasons sometimes because of the sluggish nature. But as I told you many times, you might be having an immediate supply near your demand zone. Or similarly, if your supply is your entry, you might be having an immediate demand zone. One of these things might be making your zone sluggish. But is it a sluggish? No. At the time when the zone is created, see, it has follow-through candles. A drop candle, another drop candle. But here you have a rally candle, you have a drop candle, some base candles within this leg out. And finally prices moved within this area for some time. Ultimately, supply completely dominated, and it completely took all the institutional order flows. That's why understanding sluggish is very, very important. I'm not saying this is the only reason. There could be some other reasons might be there, but this is one popular reason. The reason for the sluggishness, there could be immediate opposite side zone might be there. If it is demand zone, opposite side is supply zone. Suppose if it is supply zone, opposite side could be demand zone. Because this is a newly created demand zone. This is already created. It is having good strength, this zone. But this is a newly created. The newly created is not having a good strength. It is mainly because the supply caused some damage to this institutional order flows. It consumed all the order flows, and after that supply completely dominated the demand, and the entire demand is gone, and this supply pushed the prices. Those who have gone for a short trades in this area, they would have got a very good profit here. Why short trades? Because here you have zone strength is good, follow through candles are there, and base candle count is only 2. Base candle count between 1 and 3 is excellent. Follow through candles strength, zone strength is excellent, all are excellent. The excellent gave you good trade opportunity. But is these points good enough to plan the trades? No. You have to learn some other concepts also. But these fundamental concepts itself is helping you in getting good trades. But it doesn't mean you have to depend only on these two rules. These rules also may fail sometimes. Excellent follow-through candles may fail. I can show you some examples. Maybe in this chart, let me go through any such kind of good follow-through candles gone. This is a rally, two base candles, rally, follow through candles. It gave a good profit, right? See here, a zone. Rally, base, rally. Two base candles, two leg out candles, prices came, and after that it gave you a very good profit. The move is very good. But I am trying to find a zone. Maybe in some other charts we will see. We can find the zones, but I have to do a lot of search. Time is limited. I will show you maybe other charts you may find. You see here, this is a crude oil. Yeah, look into this. You have an excellent rally candle, two base candles. That means base candle count is within 1 to 3 candles. So it is excellent. See here, follow through candle. You have a drop candle. Follow through candle is also excellent drop candle. That means this zone is excellent zone, right? Let us draw a zone here. This is a supply zone. Rally base. Next time when prices reaches, we should expect a good profit. We can go for a short trade here. But see what happens, zone is gone. Oh, those who took for a short trade, they would have got losses. Because the stop loss is hit here. Prices went beyond the stop loss. People who took the trade in this zone, they would have got losses. You may ask a question, it is having a base candle count is excellent. Follow through candles are excellent. Why this zone is violated? You may ask some questions like this. There could be other reasons that you are going to learn in the coming sessions, might be helping you understand sometimes whether excellent base candle count, excellent strength, still zones are getting violated. What is the reason? This is the question you have to ask yourself. Those reasons you will understand once you get into the other concepts, upcoming lessons or the advanced concepts you will be learning in phase 2 or phase 3 training videos. Until you complete the phase 3 training, until lesson 30 videos, you will be getting a lot of clarity on the subject, lot of clarity on what's really happening in the background. That's why completing up to lesson 30 is very, very important. You should not compromise. You should not be hurry. Many people think, okay, I will learn everything in 1 or 2 days and then I will earn some thousands of dollars profit I will be earning. That is how people will be thinking. That won't happen. You should learn the complete subject. You should invest some time. When you invest some time, then you understand the whole market dynamics. Then your decision making will be accurate. These are only the basic level concepts. Basic level concepts itself is helping you get some profits. But at the same time, you see this example. A zone having excellent base candle count. A zone is having excellent strength. Even then it is violated. You will see such kind of examples in different charts. At the same time, zone having excellent base candle count, excellent strength. They might be giving you several profits also. That is what you have seen in the other examples. This is the point you should always keep in your mind. These are what you are learning at present is fundamentals. There are other concepts you should understand to practically this zone whether you can plan the trade or not. Okay, next let us look into another chart. Forex, Euro US dollars. Recently you see we got a zone here. We have a rally, base rally. You have two base candles. Okay, rally candle, leg out. What is the next candle? Is it a follow through candle? Maybe it is without follow through candle. We don't have, maybe a candle looking large candle only, maybe failed ERC, or if you are convinced it could be a base candle. Definitely not a great follow through candle. So we can consider this as a without follow through candle. But even then, without follow through candle, you can still plan. This is not sluggish nature. Why is it not sluggish? See, prices moved further up and then came down, picked up the orders. It gave you a trade and then prices moved up again. Once again it came down, picked up the orders, gave you another trade, and again prices moved up, closed at very high. And again prices came down. Here it gave you another trade opportunity. See, each time prices are entering, it is consuming the order flow. See, first time at the type 2 proximal, it took the trades and moved up. Second time, little below, they went a little inside, picked up the order. Third time, you see, further inside they went and picked up the orders. Why? Because here already orders are consumed. A little below, orders also consumed. Now here also orders are consumed. That means so much of strong order flow is there in this zone. Institutions might have kept so much of orders in this area. That's why every time little and little and little it is consuming. You never know, further below orders are strong or they are weak. You may not be knowing that. But already it gave you 3 successful trades. Third trade it gave even much profit it gave. Every time it is making a new high. It reached up to here. Again reached a new high. Now third time again new high. But who is pushing the prices? Why sharply they are not moving? Because here you have another institutional supply zone is there. This is pushing the prices down. See, first time it went inside type 1 proximal. This is a type 1 proximal entry. Second time you see, it took a type 2 proximal and pushed the prices. Now third time it went deep inside. Maybe next time this zone might be violated. We never know. But already they gave you some trade opportunities. Currently prices are moving between this demand zone and supply zone. Multiple trade opportunities these zones give. There are some special zones, they will be giving multiple trade opportunities. Such kind of concepts you will be learning. Third phase of our training program. I developed a concept called high liquidity zones. Once you learn those, they are the most advanced concepts. Once you learn, you will understand why multiple times these zones are working. Until then, you remember, now currently prices are moving between these zones. So definitely who traded in euro and US dollar, they would have got good profits. Why it did not reach here? Why it pushed? Because you see here, you have a drop base rally. Another zone is created here. If I draw a zone, demand zone, see. This demand zone until here, from here it reached up to here. It again pushed the prices up. So demand is getting stronger in this area. Because this already demand is there, again new demand is created. That is how you should understand. But anyway, what kind of zone it is? This is a drop base rally. You have 2 base candles. So this is excellent base candles point of view. See the strength. You have a rally candle and then you have follow through candle. So this is also excellent strength. Base candles excellent. Strength is excellent. That's why it gave you another successful trade. This is type 2 proximal trade. But here supply is there, supply is currently holding the prices, not moving very fast. Maybe slowly consume, and if it may violate or any order flows at the edge of this zone, again prices may come down, anything happen. The only thing is, based on the risk management, you should plan your trades. If the risk is accepted, you can plan. If the risk is not accepted, you reject. That is how you are trading with. That kind of techniques in detail you will be learning later once you complete all these training videos. But meanwhile, you have to understand how base candle count, zone strength are impacting our trades. Next, you see pound and US dollars. And you see here, you have a rally, base, rally and follow through candle. But after that, what happened here? Let me draw a zone at type 2 proximal. See this zone? Supply might be very strong. That's why prices went a little below our stop loss and then again prices moved up. Because all the order flows are consumed, next time you see prices went further down. And once the orders are consumed, you won't be using this trade. But this is an excellent zone, right? You have two base candles. You have follow through candle. Even then, the zone is all the order flows are consumed. Why? What could be the reason? Maybe here the supply is much stronger. You see here, you have a failed ERC candle, large candle. You can use failed ERC candles as a leg-in. You have two base candles. See here, you have a supply zone. See, this supply zone is giving you multiple trade opportunities. This is the first time how much profit this supply zone gave you. Why? Because this supply zone is having two base candles. So excellent. It is having follow through candles. That is excellent. So definitely you can plan a trade and it gave you profit. Similarly, here also you would have planned, but this time it is slightly violated. Of course, prices moved, but it hit your stop loss. Okay, later on you will be learning it is a successful trade. You will be learning a concept called stop buffers in the second phase of the training course. Maybe lesson 18 or 19. One of these lessons you will be learning stop buffers. At that time, you will learn this is a successful trade. But as per the concepts you learned so far, the distal line it crossed, so our stop loss is hit. So it's a failed. Even though it is having follow through candles, even though it is having base candles, excellent. But this one is worked very well, this one is failed. What could be the reason? Such kind of reasons you will be learning in the upcoming sessions. At the time after that you get answers. After learning some concepts like trend, location, that is also called curve. Trend you will be learning in the next, maybe in lesson 8 you might be learning trend. But second phase of the training you will be learning concepts like location. You have bullish trade setup, bearish trade setups. After learning the concepts, you get better practical understanding about what kind of trades I should accept, what kind of trades I should reject. Such kind of clarity you get. At the time, these concepts also will be helping you. Which one? Zone strength and zone base candle. They will be helping you in taking your decisions. But you can't plan trade just only based on those concepts. But they are very, very important concepts. At least rejecting the trades, they will be helping you. Sluggish, you can't plan the trade. Base candle count more than 6, you can't plan the trade. That kind of decision making, they will be helping you. Because the strength is good, because base candle count is good, you can't just like that plan the trade. They will be helping you in your decision making. But they won't give you the final decision. That's why you have to learn these concepts and combine these concepts with the other concepts you are going to learn in the coming videos or in the coming lessons. Okay, got it? See, it gave you again a second trade. See, consumed some order flows. Here you see some more prices moved up. Now prices moved some more, almost near to this distal line. Is it going to give another trade opportunity or is it going to be completely consumed and further prices will go up? That you can't decide. We can't decide just like that. Lot of analysis you have to do. But time being, this zone already gave you 2 successful trades. This is the first one and this is the second one. And this is the US dollar and Japanese yen. And here also you see, here you have a rally candle, 3 base candles, you have a rally candle, you have another follow-through candles are here. Continuation prices were moving. A medium-sized leg and large candle. So that's why combining these two, we can say it is a good follow-through. Now you see this drone, let me draw wick to wick, type 2 proximal. This is a demand zone. See, base candle count is 3. 3 base candles is excellent. You have follow through candles here. Excellent. See, next time you can plan the trade. See here, from here it gave you a very good profit. If anybody felt risk is very high and they planned type 3 proximal, also would have got a trade here. Worst case scenario also you would have got a trade. I'm just telling you. Okay. Type 2 proximal line is ideal scenario. So you got a trade. Again another second time trade opportunity you got. Again third time trade opportunity you got. And again fourth time recently, few days back, you got the trade opportunity. It might have given you short returns. But anything profit is a profit. See how well these zones are working. That is how you should understand. At the same time, you see here, you have a rally candle, you have 1 base candle, you have a rally candle, you have a follow-through candle. Even then, what happened to this zone? This is gone. See, in this candle completely, if anybody planned, they would have got. What is the reason? Here it worked, but here it did not work. That you will understand once you learn the other upcoming concepts. Once you mix those concepts, you get clarity. Okay. This is NASDAQ. Yeah. You have a drop candle. You have 1, 2, 3 base candle. Let me draw the zone here, supply zone. You see here? Prices moved with a drop down. Maybe this is even much very okay. This is with the drop, but here below also again you have a zone. See, this is also a drop candle. This is also drop candle. See here with a gap down. This is also with gap down. See here. A zone's leg out with the gap is having excellent strength and tradable zone. You have a drop, 3 base candles. You have a drop with gap. This is an excellent zone. See, prices came and then sharply how came down. Huge profit it gave. You won't look into the follow-through candles. You don't care at all. It is a gap is there. That's it. You have a leg out with gap. Here also you see you have a leg out with gap. Second time prices came a little deep inside and again gave excellent trade. And finally third time this zone is gone now. This time it entered into this zone and again prices came down. Maybe not a very great profit but gave you some profit because there are some demand zones are here in this area. That's why it gave a support and again pushed. But here also some more order flows. Again it came down, not good enough. Now maybe demand is increased. This time strongly prices. A little above it went and again came down and finally completely gone. But whatever it is, you should understand a leg out with gap. See here, you have a drop candle with a gap. That's why this zones is having excellent strength. Strength of the zone is excellent. This is NASDAQ index. Okay, here you see, you have a rally candle, you have 1, 2, 3, 4 base candles. Let me draw a zone here, supply zone. See this leg out? This is a high explosive, very large leg out. See, this is a normal, a candle, large range. This is a large. This is a very high large. Very high large is called high explosive leg out. High explosive means very large. Large candle, very large candle. Very large candles are called high explosive. Of course, it is having a follow through, failed ERC. But this itself is enough. You need not worry about follow through candles. See, next time prices came and this zone is having 4 base candles. And 4 base candles is good. And high explosive is excellent. And prices entered. And then again, how sharply prices reached up to here. Here you see, here you have a failed ERC candle, you as a leg-in, you have a base candle, you have a rally candle. See, this is also high explosive. Because it is a high explosive and a base candle count is only 1 here. See, prices reached in this zone. See, this is having a only 1 base candle. That means base candle is excellent and your strength of the zone, because this is a high explosive. Because it is high explosive, its strength, zone strength is also very good. And then it pushed the prices up, 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 up. Now NASDAQ is flying from this demand zone. It picked up the orders. Not only that, while moving, see here, pro gap is created again. Pro gap need not be at leg out candle. It can be from the zone. See, prices are moving away from the zone. And within this pro gap area, institutional order flow will be there between this area. Lot of orders will be there. But risk management is very, very high if you plan trade here. That's why it's not easy. But what you can do, this is the area you will be using your target. Next time if you plan any trade, prices are going down, your target will be up to this pro gap area. You can't plan your target till this demand zone. Because you already learned pro gap areas can be used for your planning your trades, or also pro gap areas can be used for fixing your targets. And this pro gap is useful for fixing our targets. Next time when you plan any short trades, because this will be holding. Why this is pro gap? Because prices are moving away from the zone. You may say it is a supply zone, maybe it could be a novice gap, you may say. Yeah, some extent we may feel like that, but see, this entire supply zone is gone. That means this pro gap area, this gap area is confirmed as a pro gap instead of novice gap. Maybe if the supply is holded the prices, maybe we might have considered this as a supply area. Because it is having institutional strong order, it consumed all the orders in the supply. So that is a confirmation that it is a pro gap area. It is not a novice gap area. You got it? That's why we got a good examples to learn this pro and novice gaps from this NASDAQ. Similarly, Nifty also you see. You have a drop, base, rally. And this is not sluggish. This is without follow through. After that prices came and picked up the orders from in this candle, and then prices started moving up. Here you have a supply rally base drop. This small candle could be a base. Currently, this is a holding. We don't know if demand is strong. If this is violated, again Nifty will be further moving up. But here there is a pro gap is there, because you have a rally base drop follow through candle with a gap area. Definitely this is a pro gap. Why pro gap? See, this is the area holding the prices. It's not letting the prices go up. That means a lot of institutional in this pro gap area, lot of strong institutional order flow might be there. Okay. So these are some examples related to lesson 6.2, zone strength and base candle counter. I wish you got some better clarity. Let us all meet again in our next video. Thank you.